Good afternoon, everybody. Thanks for tuning in. Friday, long weekend in the U.S. We got a holiday Monday. Markets are closed. We're going to get going here in just 30 seconds or so. Feel free and let me know where you're tuning in from. And thanks for joining. Going to talk about a lot today. We're going to talk about bigger picture stuff that's applied to all markets. We're going to clear up some misconceptions with the RSI. I'm going to organize and tell you how it is best utilized. I'm going to show you significant rotation of capital impacting correlations. Those are the bigger picture things. We're going to, of course, look at Bitcoin and the crypto space. We'll look at the dollar, the 10-year, all these things. Keeping in mind, last time we had a holiday Monday, Sunday night into Monday, crypto had a good amount of volatility as the broader stock market was closed. All right, it's 2 o'clock. Rain coming. Apparently there's rain coming. All right, get rid of my face a bit. So let's see where we'll start. We'll start with the RSI. So RSI. You know I love RSI. I love bounces. I use RSI to play my bounces. RSI is applied differently in bull markets and in bear markets. This is stuff that you want to write down, so I'll try and be nice and concise. The time when you want to be using RSI as a buy signal, okay? As a buy signal, RSI is great in a bull market showing short-term oversold conditions for buying. We know that's what a back burner is. So first 5-minute oversold conditions from a breakout, looking for an hourly high or low, ideally with a confluence of signals, which means we're seeing the price hit an EMA support, EMA 12 on the hourly, 5-minute oversold conditions, looking for the hourly high or low. When all those three things align, that's when we're looking for a high probability trade based on RSI. Same thing with the hourly. First hourly oversold conditions, scouting a daily high or low. So in a bull market, we use oversold RSI for buy signals. The only time I'm going to use RSI as a buy signal in a bear market is when you are at absolute extremes, historical extremes, on longer term time frames. RSI being oversold on the 4-hour, on the hourly, on the 15-minute, the 5-minute, it means absolutely nothing to me in a bear market. I don't utilize that signal for anything. I will use it, I'll care what the 4-hour RSI is if I'm aligning it with a whole bunch of other time frames, but I need that daily RSI. Show me a daily RSI that's aligning with historical lows. What do I mean by historical lows? If I can look back and say, okay, well, Bitcoin, the last 3 times it has hit a daily RSI under 20, we bounce very shortly after. And that's spanning the last 3 years. That's a signal I want to pay attention to, and that's something I will utilize in my bounce trades. I will then zoom into the shorter term time frames. I say, okay, the daily is hitting historical oversold RSI. And how do you find historical RSI? You scroll back and look. So let's just do it with Bitcoin. But I look and say, okay, the daily is at, and this is a hypothetical, we're not there right now, but let's just say daily is at historical oversold bounce levels. And I can see going back here, we've gotten down to 15 just 2 years ago. So I know it can go lower from where we stand. But if we are at historical on the daily, I zoom in, I want to be beat up on the 4-hour, crushed on the hourly, crushed on the 15-minute, crushed on the 5-minute. I want all those time frames aligning really oversold so that I know that we'll at least get a short-term bounce in the near term, more likely than not, if I'm going to start scaling in and making an entry. That's when I use RSI for bullish entries. Those are the only 2 scenarios. Flip side, I use RSI in this bearish market environment to look short or to sell longs for profit taking. We've been seeing 5-minute oversold, 5-minute overbought conditions. Let's just go to QQQ, the NASDAQ here. Look at this weeks of trading action. Look at the 5-minute RSI. We just did it again. We just topped out at 70 and we've been pulling back. And almost a 1% pullback from that 5-minute RSI hitting 70. We look at Yesterday's trading action didn't get close to 70. The day before, it hit 70 1, 2, 3, 4 times, couldn't get over it. The day before, hourly lower high was set because 5-minute RSI couldn't get over 70. The day before, 5-minute RSI couldn't get over 70. You get the idea. 5-minute RSI hitting 70 in a downtrend on the 5-minute means scout an hourly lower high. On the hourly, it means scout a 12-hour or a daily lower high. We're using it in the exact opposite way. In a downtrending market, RSI is a bear's tool to utilize. In an uptrending market, it is a bull's tool to utilize. We're in a bear market. It is a bear's tool to utilize. So what have we seen recently in crypto? Over the last couple of days, we saw some bounces. Bitcoin, hourly RSI did not hit overbought, but some altcoins bounced more significantly, and they did. So the Trader Pro alert system shows us, for example, SHIB, hourly first back burner bounce. Back burner meaning we've been in a trending market. Bears have had complete control. We get a bounce. We set an hourly lower high. Nope, we set a 12-hour lower high marked by hourly RSI hitting 70. And there were a bunch of altcoins that did that. We didn't nail the top on all of them. But if you look at, Binance had some data issues at one point in there. But if you look at Coinbase, let's go to DOT. So it didn't nail the top, but an indication to potentially start scaling in a couple orders. And obviously it eventually worked out, pulling back 15% from when that went off. But bulls looking to take profit in overbought conditions and bears looking for shorts because we're in a prolonged downtrend. Okay, those are the two ways to compartmentalize the difference. There's other information we get from RSI. So if we see an uptrend and 5-minute oversold conditions keeps bouncing off of 30, bounces off of 30 for 3 days in a row, it's bouncing off of 30, setting the hourly higher lows and seeing continuation. The next time it bounces off of 30 and then rolls over and drops to a lower low, that tells us the character of the market environment is shifting, something is different. So it can be a signal that works significantly for a prolonged period of time, and when it stops, we know there's a shift underway. So same thing. If I see the S&P 500, or I see the NASDAQ, the example we just went over, if the NASDAQ starts to hit 5-minute 70, pull back, set a higher low, and then we see a higher high into 5-minute RSI of 76, that tells me this is different than the last weeks of trading action. There is a shift underway, and I'm paying attention to that shift that is taking place. That is as succinct and summarized a description of how I use the RSI as a major tool in my trading. I have not used RSI for day trades, trading bounces in months. A couple times in crypto, but very, very selectively. All right, first topic, done. I'll look at the chat room and answer questions here in just a bit. But now we're going to go rotation. So I've been watching for rotation. I look at the broader market. We're going to talk stocks a little bit here, but this is going to be relevant to crypto because we obviously want to be watching to see where capital is shifting in the crypto space as well. So we're watching a bear market with a bunch of sectors getting crushed. We know the NASDAQ on the weekly time frame has been getting crushed for months. We know IWM, growth names, have been getting crushed for months. The biotech sector, a lot longer. It's been getting crushed for 16 months, something like that. I look around at all this, I see the utilities sector. It was very strong, and we were looking for laggard bear action. In a laggard bull environment, Bitcoin will pop, confidence in the space, and then we see altcoins follow along, and then see more significant moves in response to that Bitcoin pop. That is a laggard bull move. We're seeing in the sectors laggard bear moves. This sector, the utility sector, generally is a defensive sector that people look to go to when there is fear in the stock market. And it did. It acted as a good hedge going up while tech and other things were selling off. That has now changed. The bears came knocking, and it was the utility sector's turn to sell off. The energy sector was extremely strong. Energy has dropped, this entire sector, 20% in 7 days. We were looking for this bearish action. I certainly did not anticipate it to drop this fast and hard, but we were looking for this bearish action for rotation. Just put yourself in the mindset. If you have been in this market and avoiding bloodshed for the last 2 months and seeing gains in your energy names, you're going to take some profit. And the feasting bears are going to say, all right, well, we've licked the bones clean on the biotech sector over the last 16 months. Let's go to energy. There's a lot of space for some downside there. We're just looking for this tilting of the scales between supply and demand. Demand exceeded supply for XLE shares for a significant amount of time. And that, the scales went like that very quickly. Everybody was on one side of the boat. The major reason I was looking short in the energy sector, everybody was bullish oil and energy on social media. And that only can last so long. We saw it in the crypto space. When everybody's on one side of the boat, it only lasts so long. And usually when the boat flips, it's a fast, hard move. This shows me rotation. This shows me money leaving the energy sector in a very fast manner. Everybody's racing to the exit at the same time. While that's taking place, look, we've seen red the last 7 days. Look at the biotech sector. Again, biotech sector has been weak for 16 months. And energy has been strong for 16 months. Look at this monthly chart aside from the last 7 days. All bull. Look at the biotech sector. It's not a major shift, but the biotech sector today is up 6 to 7%, while the energy sector is down 5%. We're holding a base of support with a triple bottom, and we're not dropping to a lower low. Tech, S&P 500, crypto, everything's dropping to a lower low. The biotech sector is not. What I am seeing this week is money rotating around. And I'm seeing money leaving energy and money going into the biotech sector. And I just imagine it like currents. Just imagine capital like ocean currents swirling around. And so they're going in one direction for a while, and then they shift. The tide shifts, the current shifts. And we went from, look at the correlation. I look at these correlation charts just like we look at Bitcoin, altcoin, Bitcoin pairings to show us correlations. So XLE divided by SPY, the energy sector comparative to SPY was way stronger. And the last 3 days, that has drastically changed. The correlation has shifted. The biotech sector, XBI divided by SPY, has an equilibrium bull break. It is the strongest it's been relative to the S&P 500 in over a month. These are shifts taking place due to flowing capital. You will see correlations change due to capital. If dollar volume is not seeing any notable shifts, you got the bots and the algos running the show. Let's just imagine a scenario where you got $100,000 of volume in a day. That's a small amount, but let's just use nice round numbers. Let's go $1 million of volume in a day. And it's just consistent. We're not seeing any big volume spikes. We just got an average volume day for weeks. If that is the case, the algos and the bots' presence, the amount of volume that automated trading systems are putting up based on correlations with the broader market and other things, is going to be a higher percentage of the average daily volume. It's going to have more of an impact. If you all of a sudden see a $5 million day when your average has been 1 million, that shows you an influx of volume. That shows you a whole bunch of traders or hedge funds or whoever it is putting capital into play. And that capital offsets a lot of what the bots and the algos are doing. If the bots and the algos doing this correlation trading have $200,000 a day, every day during the $1 million a day period, and now they've got, obviously it's going to uptick with a big volume spike, but it's going to be a lot less significant in terms of what percentage of the daily volume is attributed to automated trading systems that are trading based on correlations. And when that huge wave of dollar volume comes in, it significantly changes how those correlations are trading and the impact that they have. When there's low volume, they have a much larger impact. When there is high volume, it's a much less significant impact. For example, if I've got $5 billion and I put $5 billion on the bid for Bitcoin at 20,000. And the broader stock market keeps dumping. Bitcoin's going to hold that $20,000 support a lot longer than it would without that bid. So my influx of capital that I'm putting into play is influencing the correlation. Bitcoin will show relative strength comparative to the broader market if I am holding it at 20,000 with a large capital bid. Rant over. All right, next topic. What do we got? What do we got? So, long story short, I'm watching for the biotech sector. Any strength in the broader stock market, I am looking bullish in the biotech sector because of the shift we've seen this week. It's also quad witching. If you don't know what that is, get on Google. It is a bunch of options expiring in the stock world. That's definitely an impact with what's going on as well. So I'm watching very closely. Does it continue next week? Or is this solely attributed to the quad witching and options expiration that is taking place today? So how does this apply to crypto? We're watching relative strength and weakness in crypto. We want to know, is there big capital flowing in? Is capital flowing out? Because narratives are going to be influenced by that. Right now, if Michael Saylor and Elon Musk had reserved any buying of Bitcoin and didn't touch it until fear, and then this current macro environment were happening and they were bidding up Bitcoin, they potentially could shape the entire narrative. Because if Bitcoin is going up because of some huge capital individuals, while this macro environment is going on, people would then say, hey, look, it is a hedge against inflation. Everything's dumping. It's going up. It's a safe haven. It's a safety raft in a sea of red. And that would be a self-fulfilling prophecy because that would shape the narrative. And then CNBC talks about it. And then traders like myself put my capital into crypto because it's going up. And then it's just this self-perpetuating narrative that takes hold. I thought about that yesterday. Imagining how the role that social media is playing in markets these days, and just thinking about what would happen if we were absolutely in a recession and things looked extremely bleak, but if everything in terms of the information that was being portrayed was bullish and said nothing about a recession, then you would have, in my opinion, way less weakness. Obviously, the narrative triggering emotions is leading to magnified movements. The narrative is very, very easily, well, you know that. I mean, news media, their sole role is to poke people's emotions and control narrative. And it's the same in financial markets. So Bitcoin divided by the NASDAQ. We know that we had a very key and clear equilibrium that broke bear. And that was a very clear red flag for Bitcoin bulls. And that was part of our major dump down from the 30s to 20. I cannot be bullish Bitcoin if this chart's in a downtrend. I can't. Why would I be putting my money into Bitcoin if I can put the same dollars into the stock market and see better returns? That's what this chart is going to show us. And it's not just me, it's going to be a whole bunch of other people as well. So let's look at the macro here, big picture, zoom out to the monthly. It looks a lot like Bitcoin, obviously, but it's in a monthly, weekly, daily downtrend. And as long as that is the case, people are going to be putting money into stocks over crypto. If this were in an uptrend, it would be a different story. Generally, what we see in many fear scenarios is fear, flush, selling, baby gets thrown out with the bathwater, everything dumps. And then once there's a bottom, we see the big boys bounce, Apple, Amazon, the names that have a history and dividends and the big players. And then you see confidence seep out into the higher risk, higher reward things. Doesn't happen every time, but that's how it often happens. So, as always, the broader stock market is going to have a major impact on my views of crypto. But if this chart is in a downtrend, I'm going to play the broader market bounce over crypto. If this changes, then that game plan will change. But this is a very important chart for me. So let's now go to Bitcoin. Everybody's watching 20,000. Everybody's waiting for a break of 20,000. Right now, probably probabilities dictate a break of 20,000 is more likely than not, in my opinion. Doesn't mean it will, but why is that the case? We're still weaker than the stock market. The stock market just hit fresh lows today. Granted, it's bouncing from those fresh lows, but we're weaker than the stock market. We're still setting 4-hour lower highs. We have 4-hour EMA 12 resistance. We're in a downtrend. We're not bouncing in any meaningful way. We didn't see any kind of V-shaped bounce from very extreme RSI levels a few days ago, earlier to start this week. If we break 20,000, we'll look for some follow-through. Maybe we'll get 5% of follow-through. I don't expect a ton of follow-through because there are a lot of people waiting to buy that initial break of Ethereum 1,000 and Bitcoin 20,000. The weekly RSI is currently at 26, and yes, that is extremely beat up. And the daily RSI will be right back down into the teens or approaching the teens if we break 20,000. So those things will have me looking to establish a position during this fear for a bigger picture swing trade. But I want the shorter term RSI levels to be crushed as well. I want the 4-hour to make it back down to 20. I want the hourly to make it back down to 20. What if we don't break 20,000? You need a game plan for both scenarios. You've got a game plan if 20,000 breaks. You've got a game plan if 20,000 does not break. If 20,000 holds and we break 4-hour lower highs, we're going to look for a daily bounce to be underway, and we'll have a date with daily EMA 12. And if we don't get over daily EMA 12, we know it's not a very strong bounce, and the bears are still comfortable from the daily and weekly perspective. And for me personally, I will remain patient. You know, if 20,000 holds and we make a bounce to 23,000, there's definitely nice gains to be had there. But from a bigger picture perspective, I'm not going to chase because we could very easily just form a 12-hour higher low here and then a 12-hour lower high. So we got a low, high of the last bounce, holding support. If these 12-hour inside bars do break bull, I'm going to be scouting a lower high, anything under 23,000. And it would then be possible that we tighten up for most of the weekend. The burden is on bulls because, again, we are 3% above support and we are 10% plus below resistance. So we're much closer to a support break than a resistance break, but bulls have a chance, have to get over 21.4 to get over this 4-hour EMA resistance and set that 12-hour higher low. Essentially, the bulls are just hoping to tighten up into the weekend here and prevent from a break of 20,000. You also have to think about, put yourself in a bear's position. If you break 20,000, some bears are going to take profit. Some bears are going to continue holding their position. Is anybody going to be buying a break of 20,000 to be holding for multiple days? If they are, in my opinion, I don't think that's a good risk to reward trade. So I do think that there will be more buyers under 20,000 in the upper teen thousands than there are sellers and shorts. There'll definitely be some stops that hit on the initial break, but in terms of bears establishing new positions under 20,000, if I'm a bear, if I'm looking longer term, I'm waiting for a weekly lower high again at this point before I'm establishing a swing bearish entry. Maybe a daily lower high if I want to be aggressive, but daily lower high at a minimum. Dominance chart. We look forward to you joining, Hector. So dominance chart is dropping notably, which shows us in this sideways range that altcoins are bouncing. Again, it was altcoins holding support and trading sideways, bouncing more significantly than Bitcoin, and not dropping as significantly as Bitcoin over the last 5-6 trading days. Weekly consolidation is underway. This is a big notable drop in the dominance chart. But it is not, what we're not seeing is Bitcoin bouncing and altcoins bouncing more significantly. And altcoins, 40% off their lows, and Bitcoin 15, 20% off its lows. This is a sideways trading environment that is leading to the dominance chart dropping. So it doesn't give me a ton of information personally. Looks like some names, bulls are showing up. Sol. We have 4-hour tightening ranges across the board. So looking at Sol, I'm looking at a low, a high, a higher low, and the 4-hour got sideways here. We can just condense it down to the 6-hour. We're looking for an equilibrium. We're looking for anything under 36, which is still over 10% away, to be a 6-hour lower high. And knowing that the weekend generally brings lower volume and volatility recently, we can anticipate that a 6-hour equilibrium is probably the most likely scenario. So bears are scouting lower highs on this current bounce comparative to the highs of the previous bounce. And then if this does tighten up all weekend, keeping in mind that on a 6-hour chart, 4 candles every day, let's say we get 10 candles before we're heading towards the futures open Sunday night, we could easily bounce a little bit more, set a lower high, pull back a little bit, and have an equilibrium into the futures open, into the holiday Monday, where stocks are closed. So that's what we're keeping an eye on. And if we just run down the list here, Ape. So again, we got to find the time frame that is most clear. So Ape, I'm scouting a 12-hour lower high, anything under 430. Waves is a beautiful equilibrium. Waves is scouting a 6-hour lower high, anything under 525. Is a bull break possible? Yes, it's just not the most likely scenario because of how much we retraced. Some of these bounces retraced 80%. If they only retraced 40%, we'd be looking for trend changes and continuation. But they retraced enough to create the space for the lower high next bounce. Sol, scouting a 6-hour lower high, anything under 36. FTT, looks like a 6-hour lower high is already set. We're scouting a 6-hour higher low compared to 23. How these ranges, these tightening ranges break is obviously going to give us some information on daily charts. Mana is scouting a 6-hour lower high, anything under 94 cents. Couple inside bars right now. Matic, tightening up on the 6-hour. OMG, a little bit less clear. I'd be on the 12-hour with anything under 206, a 12-hour lower high. Sand, same thing. I'd be on the 12-hour. GMT, same thing. Anything under 70 is a 12-hour lower high. Again, look at this beautiful equilibrium. We know volume and volatility is coming here. Low, high, higher low, lower high, higher low. It's just been tightening up for a week. And it can tighten up for a couple more days, possibly. And then we know volume and volatility are coming. Sushi, looking for a 12-hour lower high, anything under 113. You can go down the whole list, and every name has some version of this setup, and every name is looking for a potential 12-hour lower high or 6-hour or whatever time frame because there's so much space for them to form. Again, right now, Binance can go 8% higher over the weekend and still be looking for a 12-hour lower high. Everybody's just tightening up. DOT has a ton of space for a 12-hour lower high. We can go up 15% and still be scouting it. XRP had a solid bull move, but I like the 4-hour on XRP. Very clear equilibrium, looking for a higher low compared to 30 cents. We're going to see some names break before others. The more names that break in one direction, while other names, most names are still tight, shifts our probability needle. If one name breaks, okay, paying attention, but doesn't really matter. If 3, 4 altcoins, some major names, start to break their ranges in the same direction, even though Bitcoin is still tight, even though 75, 80% of altcoins are still tight, our probability needle shifts to favor the bulls. So I look at this XRP chart, this 4-hour equilibrium is going to break before a lot of 12-hour tightening ranges break. It's developing faster. It's a good live stream. What do you got to say? Why are there stock market holidays every 2 weeks? Shut your mouth and don't complain. It's a thing of beauty. It's a new holiday. and we welcome new holidays. More holidays are needed. Let's give the psyche a break. Let's keep the psychological stress factors on the general population from pushing us to a breaking point. ADA. I was just kidding. ADA 12-hour. Same as everybody else. Anything, I'm looking at this, well, let's go to the 6-hour maybe. So it depends on how zoomed in you want to be. Because right now we got a low, high, higher low, lower high. This little tightening range is going to break this weekend. But there are scenarios where a short-term equilibrium can break into the formation of a longer-term equilibrium. What does that mean? If ADA sees a 6-hour higher low and higher high, you can look at this and say, oh, great, that's an equilibrium breaking bull. And it is, if we get over 504. But zoom out to the 12-hour. What if that equilibrium on the 6-hour breaks bull and we shoot on up with some follow through to 52.5 and then pull back? Then we've got a 12-hour equilibrium. So we can't be faked out. That's why we're always playing the zoom out game. When one time frame breaks, we're zooming out to ensure that we're aware of what the next time frame most likely scenario is. Because I used to get faked out when a short-term equilibrium would break into a longer-term equilibrium and it would lack follow-through, and I would be a bit stumped as to why. That's why. You got it, Chris. Glad the stock market is treating you well. Do I think we'll see a daily lower high in the stock market? Tough to say because we've got such a close daily lower high nearby. Well, I guess it's not that close. We set it Wednesday. It's not as close as I thought it was. So for example, from the low, SPY could bounce. Come on, tools. SPY could bounce 4% and still be in a daily downtrend. So I would anticipate, more likely than not, that another lower high would be coming. Let's just go to the futures chart, S&P 500. It would be something like, I would be watching for something like perhaps an inverse head and shoulders, where we get a bounce, but we don't break the lower high, and then we set up the 12-hour trend change if we're going to see a shift. It's possible we break the daily lower highs, but not without notable bull volume, in my opinion. If you get the 5-minute overbought and everything goes well, how do you know where to take profit? So, many traders like myself will take profit on the initial pullback to then be in a risk-free trade. Because if we get to 5-minute oversold condition, 5-minute overbought conditions, and it marks our hourly lower high, and it starts pulling back, we're not sure if that's it yet. You know, it has to take a while to play out. We have to lose the 5-minute uptrend. We have to see bear follow through. So on the initial pullback, I take some profit where if I'm wrong and we see continuation, I can stop out with my stop above the high, break even stop out or tiny loss, and then I can be patient and I can wait for a lower low. It depends on the individual scenario. So for example, you know, in Bitcoin with where its daily and weekly RSI are, I might be less hopeful of holding that position for a lot more significant downside. I might be more aggressive with my profit taking, anticipating that a daily bounce is going to get going sooner rather than later. But in a different scenario, I would perhaps give it a chance to drop down to fresh lower lows. So my profit targets are based on support levels, based on dollar amount to where my goal for the trade is hit. That's pretty much it. So you have to determine in advance what your target is on that trade. Tino from Traders Reality. I don't know them. I'll have to check them out. S&P 500, yep, that top fishing play worked out. So here's a top fishing play. 368.75 resistance. We go straight up to that level. We reject by 8 pennies. 5-minute stair-step pattern. The bear break on the 5-minute stair-step pattern happened at 368.16. Any bear top fishing or using the 5-minute stair-step in combination with a top fishing play can't lose on this trade now if you take some profit. We're still in a 15-minute uptrend, so I personally would be taking some profit in case the bulls just keep setting 15-minute higher lows. So that's a scenario where I'm out half and my stop's over the high, risk-free. If we roll over into hourly consolidation, I've got a winner. If we don't, I stop out and don't lose a thing. But I'm taking partial profit because the short-term uptrend is still intact. Which pivots higher low indicator am I using? I forget what they did. I don't know much about my own charts, and actually Jungle Funk Joey just made a video about how to set up charts like mine and like Lori's. I'll make that video public. We have a bunch of members only videos, but I'll make that one public. I just need to wait for someone to make me a thumbnail for it. So sometime over the weekend. But I don't know. I don't know. Something changed about how they do that indicator, and you can make the background oblique. You can make it something, and it then doesn't have that white box or whatever it is now. The market is definitely exhausting. It is psychologically, I said in a recent video, the CVID dump, the 2018 dump, it was like ripping off a Band-Aid, fast and hard and over quickly. This is draining. This is prolonged. I feel it. I am very fortunate to be very comfortable financially in terms of mostly being all cash most of the time anyway and not really being hit too hard by this market environment. But I still feel this collective dread. And I think it comes from empathy with all my friends and family of just knowing how that is not the case for them and how things are teetering from not being fun or close to not being fun. We'll have to see what housing does. But yes, it is definitely psychologically exhausting. My trading, it's obviously the market environment is impacting my trading as well, but psychologically, my trading is definitely being impacted this year by a whole bunch of things, but that is one of them. You know, just messages from people as well. The messages I get in a bull market versus the messages I get in a bear market are very, very different. And so that impacts me for sure. Hearing about someone blow up and lose their entire account in Luna versus hearing about someone who just bought their dream house because the cannabis stocks ran to blue sky breakout, euphoria. So very different messages to receive. The longer BTC hovers around 20, good or bad, I'd say bad, because the burden of proof is on bulls, and if we're hovering around 20, bulls are not proving a thing, and bears remain comfortable. Appreciate the likes. We're not even at 100. Let's jack that up to 147. How many years did it take until I could make profit in the stock market? I lucked out and stumbled into a bull OTC penny stock cannabis market in 2000. Well, it didn't really get going until 2013, 2014, but it was going enough in 2010 and beyond that I could make all my stakes and still be profitable. I shudder to think if I started at a different time and blew up my account, I would not be a trader right now. I would have been done. I would have gotten a 9 to 5. That would have been it. If I was not making my mistakes in a very mustache hair in my mouth environment. A very favorable environment to allow me to make my mistakes and not blow up my account. So I was fortunate enough to be profitable right out of the gate. I definitely had some red years mixed in there as I was learning. I had a red year the first year we started the Chart Guys, as I tried to navigate running a business, live streaming while trading. Those things were extremely difficult to do at the get-go. And so I had to practice a lot to be able to do those things at the same time as trading. So, hard to say, because it was the market environment that made me profitable out of the gate. $146? Oh, we skipped it. $150. That's okay. What are reasonable goals for new traders in terms of monthly, yearly percent of trading stack? Beat the market. Beat the S&P 500. If you're flat this year, you're doing great. If you can't beat the market, that's telling you you should just leave your money in the market and do something else with your time. So is this SPY now showing us why I sell that partial position? Because we just set a 15-minute higher low and the short-term uptrend is remaining intact. What role would I say intuition and gut feeling play in trading? Well, see, that's difficult to say because intuition and gut feeling for me is derived from significant experience. So it's not just a feeling you get, it's a feeling you get because of all the subconscious programming and examples and historical examples you've got logged away in your brain. That's what a gut feeling is. So I'd say it's significant because for me, gut feeling is experience. And we know experience is very significant. At what size portfolio would you suggest getting into a trading group like the Chart Guys? That's difficult to say. Whenever anybody asks any question about finances and money amounts, it's so different from one to the next. Someone out of college with no family and no mortgage, $5,000 is a lot of money. For someone who has had a career for 20 years, $100,000 maybe is a lot of money. Those are two very different numbers. So I'd say it's up to the individual. I personally started with $3,000. And I added to it with poker winnings and odd jobs and getting my hustle on, added to it throughout the years. But from day one, it was $3,000. Sam the Crypto Lifer. I'll have to check him out as well. Tell all these people I'm always down to do talks. Tell them to reach out. What is my framework for selling partial positions off a bullish back burner bounce? Well, they're not happening much in this market environment, but I will do things like, if we're in let's say Bitcoin all-time high run, I'm buying hourly oversold conditions. The initial bounce, I will sell partial position to be able to put my stop under the low and be risk-free. Because if we drop to a lower low, at that point, once the bounce has started, that tells me the market environment is shifting because of that lower low. If we don't break that lower low, the uptrend remains extremely strong and the environment remains the same. So I'll sell partial, I'll put my stop under the low, and then I can either just walk my stop up with every hourly high or low. I can have a target. I'll sell just under the previous all-time high. Or I can say, I think a new all-time high is coming, and I'm just going to leave this break-even stop loss and keep holding until we see new all-time highs. So it depends on the broader market environment. It depends on the setup on a bunch of different time frames for the individual name. It's not one size fits all. It's definitely subjective based on the individual setup. If it's a strong trend, I'm going to let it ride and just walk a stop with the trend. As a trader starting off, focus on education, preserve your capital. Use a stop loss on every trade. Focus on education, preserve your capital. Get 100 hours of studying under your belt before you risk any capital in the market. And then you start playing around with small capital so you can start to feel your emotions coming into play and learn from those experiences. Did I start as a holder? Yes. A penny stock holder. That didn't last long. Glad the stair-step strategy is great. Prediction for how long until SPY returns to near all-time highs? I have absolutely no idea. The vast majority of people have absolutely no idea. Why guess? Why not just take it one day at a time where we get more information every single day? Trading is not about predicting. You can establish a thesis and then look for clues to confirm or deny that thesis. I think the energy sector is due for consolidation. And then I watch the short-term trends. And if we see climax-like volume, if we see a confirmed hourly downtrend, if we see a loss of the daily higher lows, that confirms my thesis. So I'm not making a prediction. The energy sector will top out on June 37th at 7 a.m. It's more establishing a framework that the technical information then confirms or denies. What is my preferred style? Scalping, day trading, but that requires a lot of time and effort. And so that is not sustainable for decades for me. Man, NIO is just so strong. So on the subject of rotation, look at what NIO has done the last month. There is capital flowing into Chinese names. Chinese names were the most beat up on the way down. They've been basing for months while the US stock market keeps dropping to lower lows. LI is another EV Chinese name that is at multiple month highs. So a name like NIO is just positioned really well if the broader stock market can find a bottom. Monthly bounce is underway. Look at this 6-month time frame. What am I going to be looking? Well, let's go 4-month. What am I looking for here? A good old-fashioned equilibrium. I have no idea where that lower high will be set, but I'll be using the shorter term time frames to help gauge when that lower high is being set. But NIO is positioned extremely well for bulls if the broader stock market can find a bottom. NIO divided by SPY, straight up for the last month plus. That is not related to crypto. It just caught my eye on my other screen. Fidelity, Thinkorswim, Interactive Brokers, Tastyworks. Those are all the most popular platforms. When I trade, what percentage do I use for each trade? That depends on my conviction and confidence and aggression level. It changes based on the setup. It changes based on the instrument that I'm trading. If the instrument is more volatile, I'll be using less capital. If it's less volatile, I'll be using more capital. That's why it's important to get a feel for, get comfortable trading specific things. So you can do the math instantly in your head. You know, I know what 5,000 shares of NIO is like that. And you get comfortable with the individual names and you get to learn their volatility. And then when they have favorable setups that suit your trading style, you use larger capital. And when you are less certain of things and unsure, or if you're in a losing streak, or if you're struggling, you're using less capital. This year, I am using less capital. I know I am. I knew it from the get-go. Because this is not my ideal environment. I smashed the aggression in euphoria markets. Crypto twice, cannabis. We're not in a euphoric market right now. So I go conservative and I wait for a euphoric market to return. There is going to be a euphoric psychedelic sector run at some point in the next decade. And I will go very aggressive and I will make a good amount of money. And that money could potentially last multiple years. So if I go conservative for a couple years waiting, then it balances out. I have a video talking about psychology. Again, just play around our YouTube channel with over 9,000 videos. But for those talking about books, all the psychological books that helped me over the last 20 years growing up, Psychology and Mindset of a Trader has all that info. Again, I just can't stress enough. You are looking at 7 years of everything that I've learned about trading is on this YouTube channel. All right, I'm done here. I hope you all have a great Friday. I laugh all the time. More cost-effective way to pay for the chart guys in the UK. I mean, we'll accept crypto. But I think a dollar's a dollar's a dollar. All right. Thanks, everybody. Do good things. And I will see you. I'll put something out this weekend. Maybe. At the very least, how to set up your charts